But I think it's also a way for them to control the narrative. Having them decide what is ESG versus like an individual company. So I remember, I think it was the S&P ESG index. This was about a year ago that Tesla wasn't on it, but Exxon, I believe, was like number 1 or number 2.
Sure.
And it was all based on the fact that I guess there were some people that said that there was some discrimination going on at one of the factories. Okay, I mean, I'm not saying
they got dinged on the social component.
Yeah, I think that's what it was.
Is that social? I guess I don't know.
I'm not really sure exactly, but if you look at like, okay, let's look at, and I'm not being anti-oil. I'm not criticizing Exxon for this, but you can't tell me that from an environmental and social standpoint that ESG has, or Exxon has embraced ESG more than Tesla.
Okay, everybody, welcome to the Angel Research Podcast. We are here as usual today to discuss the market's hottest stock stories and investment opportunities. Today we have Mr. Jeff Siegel joining us. Jeff is the founder and investment director of the weekly investment advisory service Greenchip Stocks, and he's here today to talk to us about a wide array of investing topics. So we're going to talk about ESG investing, what that is. We're going to talk about a unique income opportunity in solar energy. We're going to talk about electric vehicles, the electrification of the world, and we might touch on the recent train wreck in Ohio and some of the environmental impacts going on there. Per our usual disclaimer, nothing that we say here today is personal financial advice. We can give you tools and insights, but we cannot make trading decisions for you. Also, please like, comment, and subscribe. The engagement really helps us out. And join the recently launched Discord. There should be a couple of links, one in the description and one in a pinned comment below. I think we're probably limiting that to 50 slots. We usually have, upwards of 1,000 people watching these videos. So if you want to lock in your spot, it's completely free. Just click the link. And basically the Discord is a place where we talk with our experts and viewers like you, and everyone kind of shares their investing opinions and what they're seeing in the market. We share daily news. So join the conversation. I highly recommend you take advantage of that opportunity while these slots are open. With all that out of the way, Jeff.
That was a lot to get out of the way.
It's a lot. It's the most nerve-wracking part of the podcast is the introduction, for me at least.
Well, you should say it like they have on there's a gambling site now that's on the Michael Rappaport podcast, and after they talk about the gambling site, they have to do the disclaimer, but it's just like. And the whole thing is like if you have a gambling problem, you can call these different numbers, but there's nobody catching what they're saying at all.
Are they actually reading it live, or it's a pre-recorded?
It's got to be pre-recorded.
Yeah,
and they probably speed it up a little bit.
Okay, Jeff. I was hoping you could kind of, for anyone who's not familiar with who you are and what Greenchip Stocks is, can you just give us a quick rundown of those two things?
Yeah, so I started Greenchip Stocks in 2006 with the idea of focusing on what's called socially responsible investing. I like the idea of what we say, doing well by doing good. I want to invest in companies and industries that I believe are making the world a better place. I should point out, though, that this whole concept of ethical investing, socially responsible investing, it's all relative. Everyone has their own idea of what is considered socially responsible or ethical. So I don't presume to, push my beliefs on other people. It's just, my own personal belief system is integrated into my...
Sure. You should turn your drink over here. You're drinking kombucha. That's like the most
kombucha. I'm very woke today. I have
possible.
My kombucha.
Maybe I guess you could you help us? Actually, no. First, tell us what Greenchip Stocks is and what that newsletter is all about.
Well, that was the thing. I was able to find the things that I'm interested in from the standpoint of the companies and industries that I believe are making the world a better place. So I was very active in clean energy, cannabis, biotech, food alternatives, food tech, just anything that I really feel like offers some benefit to the world.
Sure. But still trying to make money in the process,
of course,
correct?
It's not, I'm not a charity, you know, and I think that's a big thing. Like I get a lot of conferences where, I'm there to talk about opportunities, say in clean energy, and then someone will inevitably bring up a company and I will say, well, this is a horrible investment for this reason. And it's a lot of pushback. Well, why are you being so dismissive of this company? They're doing great things. I'm like, but it's not going to work if they can't make a profit. Then they're not going to be here. So what's the point?
Sure.
You're either going to be here for the long term or not. I always thought Tesla was a great example of that. So when Tesla came out, like Tesla launched the electric vehicle revolution. It would not exist without Tesla, without Elon Musk. That's a fact. So so should we criticize Elon Musk for profiting off of this company that is essentially like, decreasing the amount of CO2 in the air and decreasing the amount of chances of eventually having oil spills and just all the bad things and environmental burdens that come with our reliance on oil, not to mention the national security burdens that come with that as well.
It's been interesting watching the flip of kind of like what people like. The people that loved Elon Musk seem to be the people that hate Elon Musk now, and the people that hated Elon Musk, and I'm kind of guilty of this myself, are the people that kind of like Elon Musk more now. But I think, once people start making money, people just there's a certain subset of people out there that automatically just kind of give you the evil label because you're rich and because you're wealthy. But,
well, they're just like, well, why doesn't he donate more money to this? Like, well, why don't you donate more money to that?
Yeah.
The percentage wise, go ahead and donate 50% of your money, just like you're expecting him to do. Oh, you can't do that? Oh, okay.
So for you, you're trying to tick both the boxes of what you deem to be socially and environmentally responsible, and also something that's a good profit opportunity.
Well, and I would add to that like I'm a big believer in the idea of capitalism being a catalyst for positive change.
Yeah.
And I capitalism is attacked a lot now, but in terms of, again, making the world a better place, in terms of cleaning the environment, making the air cleaner and the water cleaner and the soil healthy, and giving people the opportunity to build a life and to build wealth. Like, you don't get that with anything else but capitalism. So the idea of criticizing capitalism or saying capitalism is the reason that we have environmental problems or social problems is a complete bullshit. It's the exact opposite of that.
Okay.
Should I step down off my soapbox now?
Well, yeah. Well, I think there's going to be, I'm sure there's a lot of people who disagree with you and think that capitalism is a catalyst for a lot of, bad things. But, I think that, most reasonable people think that you need to strike a good balance between, a competitive private landscape and then like regulations that don't, prevent companies from doing, truly terrible things.
Right.
And holding people responsible for, holding these companies responsible for when these things happen. So, I mean, I guess maybe that's a good transition for the Ohio train wreck that's going on right now.
Well, if I can point out what you said, though, it's like making these companies responsible for things they did. And my attitude is, I don't want to make these companies responsible for what they did. I want to make it so what they did doesn't happen in the first place.
Yeah.
And I think oftentimes that is a result of government. So the government puts these regulations in place, but they're skirted all the time. If you have the money and influence, you don't have to pay attention to regulations. Now, I don't know what happened to that train derailment, and I'm sure we'll find out eventually. But I suspect that was it Norfolk Southern.
I don't know anything.
That's the name
about
of the company, right? Norfolk Southern or Southern. This is how clued in I am to this right now. There's no doubt in my mind that there's some kind of safety protocols that were not met, and this happens all the time.
I mean, I've seen pictures of the trains; they just look rusted, like they just look so old, and the infrastructure is obviously crumbling. So.
Right. And even like the cars themselves, I know that they have like certain measurements that are taken to insulate these train cars from things like this happening. So it doesn't make sense to me that you would put that stuff on a rail car knowing that if it does derail, there's going to be a problem. So somebody missed something. And, again, you can have all the regulation you want, but if you're not following it because you don't have to, well, then what's the point?
Yeah. So ESG, what does this stand for?
So environmental social governance. ESG, I believe, is a sound idea. Okay, and when it started out, ESG was simply a voluntary thing. Companies would say we want to incorporate ESG standards into our daily operations, which for me I think is honorable. Is an honorable thing to do. The problem is, at some point, Wall Street decided that, hey, people want to invest in like cleaner energy or things that are, maybe make things more equitable for everyone. So they essentially hijacked it, figured out a way to monetize it, and really turned something that really had it was so benign, and it was really just like a voluntary thing. And then all of a sudden you say, well, did you reach these ESG standards that we put in place? Well, who are you? A bunch of dudes on Wall Street. Like, I'm sure you really care about the environment.
Yeah.
You know?
And what is the benefit of meeting those standards? Do you get to be in a specific fund? Are there tax benefits or something? Is it mainly the PR bump that you get?
I think it's the PR. It's also people that do. I mean, there's a growing interest in investors that want to invest in things that are better for the environment.
Mm-hmm.
So it's a way to kind of capitalize on that. But I think it's also a way for them to control the narrative. Having them decide what is ESG versus like an individual company. So I think it was the S&P ESG index. This was about a year ago that Tesla wasn't on it, but Exxon, I believe, was like number 1 or number 2.
Sure.
And it was all based on the fact that I guess there were some people that said that there was some discrimination going on at one of the factories. Okay, I mean, I'm not saying
they got dinged on the social component.
I think that's what it was.
Is that social? I guess I don't.
I'm not really sure exactly, but if you look at like, okay, let's look at, and I'm not being anti-oil. I'm not criticizing Exxon for this, but you can't tell me that from an environmental and social standpoint that ESG has, or Exxon has embraced ESG more than Tesla. The weird thing about ESG too is like, and this is when I'm talking about green chip stocks, like a lot of this stuff is relative. You know, like what do you believe is good for the environment or bad for the environment? If you're looking at environmental issues, I think that without using the word ESG, I think some of the things that are often included in ESG do need to be considered. So I'm going to bring up climate change, for instance. When people attack ESG, oftentimes they'll talk about climate change, and it's like, well, a company should not have to, abide by certain rules that talk about climate change. It has nothing to do with their operations, that kind of thing. But that's not true. Most industries will be affected by climate change through extreme weather events that are a result of climate change, whether you believe that or not. I don't care. My point is extreme weather events are happening, and if the presumption is that this is a result of climate change, we're not saying you have to stop driving a car or fly in an airplane. But what they're saying is there are risks that come with that. So if you're an insurance company, if you don't take into consideration climate change and extreme weather events as a result of climate change, then you are doing a disservice to your investors. And it is irresponsible, I believe, for a lot of these companies to disregard these things, whether it's insurance, home building, agriculture in a big way. And it's unfortunate because when ESG got into like the realm of Wall Street, that really politicized it. And it makes it difficult now. So let's say if I'm running an insurance company, and I say, of course I have to take this into consideration. I'm not going to insure a house that's right on the ocean because I know in 10 years that beach isn't even going to be there anymore, or 20 years, or whatever it may be. I think it's irresponsible to disregard those things. So I don't think it makes sense to politicize it or look at it as like an environmental thing. It's just a responsible thing. You have a responsibility to your shareholders, and if you disregard this increase in extreme weather events, then you are essentially acting irresponsibly, just as if you don't reveal, an accounting error or something like that. That's kind of how I'm seeing it. I really wish that ESG would have just kind of stayed underground, which would have stayed as like, hey, there's this thing called ESG. Do you want to integrate it into your operations? Yes or no? Doesn't matter if you want to or not. But now, it's going to be the same thing this year. It's going to be politicized. Everyone's going to talk about ESG and wokeness and how it's going to wreck the country. And it's just like, dude, just invest in what you want to invest. If you don't want to abide by ESG standards, however you see them, that's fine.
Do you feel like maybe the whole ESG thing is like giving you a bad rep at all, or like stealing your thunder at all? Because when did you launch green chip stocks?
2006.
And that's, the whole premise of green chip stocks was kind of in the spirit of ESG.
Right.
And now it's being abused by Wall Street, and it's kind of being diluted.
And I've had to defend it for sure. Like, I've definitely come out and said, again, I've said it here already. Fundamentally, the concept of ESG is sound, but it has to be voluntary.
Yeah.
It has to be voluntary.
Yeah, I think that the big thing is like who is deciding what is environmentally, socially, responsible,
Right.
and what are their motives. And I think that that's kind of like people need to be aware of those things and not, take anyone that says that a company is ESG with a grain of salt and
Right.
do their own research and due diligence. And like you're saying, decide for themselves whether or not they agree if this company is being ethically responsible or not.
This is actually it's not necessarily new either. So when I first started this service in 2006, I did look at a number of mutual funds. I wrote an article about some mutual funds that were supposed to be, socially responsible mutual funds or whatever they were called at the time. ESG wasn't being used at the time, that term. But then you look at them and not a single, well, maybe, no, I'll say not a single. There were probably a couple that were legit. But most of them were like, oh, we have a solar company and Exxon and BP and a bunch of big ag companies, industrial agriculture, like just poisoning the planet with all these things. And I'm like, oh, but we put a solar company here, so we're technically an an ethical mutual fund or whatever. And people, you can't trust Wall Street. You
Sure.
can't trust these finance guys. I mean, they're always hustling something. And ESG was just the latest thing. But the great thing about ESG for them is they can play both sides of it. They say, oh, we have an ESG fund for you if you're a tree hugger and you want to invest. Great. Oh, well, and the same people in the same office saying ESG is bullshit and, we need to stop the wokeness and all this stuff. And it's...
Yeah. Well, I think that there's I feel like lumping the environmental stuff with the social stuff together is a little bit weird. We've all heard the term get woke, go broke, or go woke, get broke.
Right.
Is there a point where the social aspect of ESG can become a detriment?
Oh, sure. I mean, absolutely. I think there are both advantages and disadvantages. I think the advantages, one thing about the social thing, and I was thinking about equity and hiring practices. We saw this a lot in the cannabis space, where when the cannabis industry first hit, and I would meet with a lot of the CEOs of these companies and their management teams. Rarely did you see women or people of color. Now, for me, the first thing I'm saying is, it's not just white dudes that buy weed. Okay, so if you're selling weed, you should probably have also women and people of color on your board because it's a smart, strategic thing to do. I'm not saying you should do it because you feel guilty that there's just white people.
Sure, but
on your
is it?
board.
I mean, yeah, is it a smart thing to do if you're just purely doing it to meet a quota? Like if if you have like two candidates that are lined up and you're like, I'm going to choose this one because it meets this social quota, but you're passing up experience or whatever.
Yeah, that's never a good idea.
Yeah.
I'd never support such a thing. And I know some companies, maybe do that. I don't know any specific examples. I'm sure there are.
Yeah.
But yeah, if you're selling something, unless it's to a specific group of people, I don't know why you would not include every people in your company that represent your customers.
Yeah, well,
I think common sense.
Yeah, well, I mean, I think that I don't think that you should exclude anybody in the process of interviewing and hiring.
No,
but
I would say honestly though, if I was running a cannabis company, like if I was selling weed, I would definitely have some people of color and women on that board.
Sure,
and not just like one or two. Like you figure out like more than 50% of all cannabis sales are made by women. So why would I have 90? Why would I have a 90%?
You said 50%, really?
Yeah.
That actually surprised me. I figured it'd be mostly men.
It's mostly women.
Okay, wow.
Not by a wide margin, but
okay.
But enough of a difference that it's worth noting.
Yeah, I mean, I feel like at this point, everyone smokes weed. I don't think there's any real demographic barriers to who's smoking weed and
I
who
think
isn't
you're
these
right
days.
on that.
Okay, I want to transition the conversation to some specific opportunities that you're looking at right now that may be in the realm of ESG or not. The first one I would think that it certainly is. It's kind of this solar income opportunity that you've been talking about. I don't know all the details, but as far as I understand it, this is a way for people to invest in private solar companies, so not publicly held entities, and get a share of those profits on a regular basis. Could you maybe tell us how many companies are doing this and explain what that process is?
So it's not so much different companies, but different projects. So essentially what this company does is it will go out and finance and build a solar project. And what they do is they'll get what's called a power purchase agreement with the local utility. And a power purchase agreement, all that is, it's basically the utility saying, okay, we're going to pay you X amount of dollars, for your energy over the course of 15 to 20 years. Usually it's 20 years because they're long. These contracts are long term. So you lock in at a certain rate. Well, some of these projects they're not easy to fund all the time, or they can be funded, but if you need the capital to fund these projects, there are a number of ways to do that. What this company does is it uses a crowdfunding model, and they'll get the power purchase agreement in place. They'll get everything in place to start building the project, and in many cases, they will start building it because they have larger investors that have already ponied up like maybe a couple million to get it started. And then they go out to regular retail investors and they say, hey, would you like to be a part of this? If you invest $500, you'll earn a internal rate of return, depending on the project, anywhere from 7% to 15%. And then what happens is it's just income. You get that for the next 15 to 20 years.
Just on an annual basis?
Yeah. So what will happen is you can turn it over. The money comes in and you can just collect your check. I think they let you do it maybe like every quarter or something.
Okay.
Or you can just let it ride. Obviously, like I let it ride.
Can you reinvest and then obviously it compounds?
Yeah, and that's really the point. That's what you want to do is kind of set it and forget it. The nice thing about it is it's not going to make you a millionaire, but if you put a chunk of money in, like today, that's just going to keep making you money for the next 15, 20 years. And the returns are higher than inflation. So unless inflation gets, except for, so one project is 7%. So I think inflation was at 8% at one point.
Yeah.
But for the most part, you're always going to beat inflation.
Yeah.
With these projects.
Yeah, well, I would say, even regardless of inflation, I think most investors would take a 7% to 15% return on an annual basis. It's kind of like a no-brainer.
Right, and it's not affected by stock market swings. You're locked into that rate. That's it. It's not going to go down. It's not like you made 7% and you have to worry about going down to 5%. It's locked in.
Yeah. Are there what are the downsides or the risks to that kind of
I think the only downside would be is if you're impatient, and you just want you want to trade.
It's the fact that your money is illiquid.
Right.
Yeah.
Right. This is an investment. This is not a trade. The only other thing you have to consider, and I'm not personally concerned about it, but this company has projects all over the world. So there's some parts of the world that it is possible that maybe one day the president of some country wakes up and says, you know what, I'm going to nationalize everything, and then that's it. The guys that run this company are pretty smart. They have operations in Africa and Brazil, so that I know they have like the risk factors on those places. But there's so much money invested in those things. I think that risk is pretty minimal.
Okay. And I have to ask, are there any requirements that you need to meet to be able to invest in this? Because I know that a lot of private investments, you need to be accredited. You need to make a certain amount of money a year.
You don't have to be accredited. You don't have to go through a broker. They have it set up on their platform. You just go in, fill out a form, wire the money. I think the minimum investment is like $100.
Okay.
So it's pretty cheap to get in. And you can also add more as you go as well. So if, say, you lock in on this project and it pays 8%, and you put in $1,000, maybe 6 months later, you get a bonus at work. And you're like, I want to put some more money. So you just put it back into that project as well.
Okay. And if someone wanted to kind of get all the details on that, what would they do? They would join Green Chip Stocks, or?
Yeah, I have a report on it. It lays the whole thing out. The opportunity, it gives you my personal contact over there, the links to get you to the sign up page. It's very, very easy.
Okay.
It's actually, quite frankly, I think it's easier than actually buying a stock.
Okay, yeah. So you don't actually need a brokerage account to do it. You can okay.
No.
Well, that's pretty compelling. I might read that report.
Yeah.
Okay. I want to talk about this battery belt that you kind of have been talking about for more recently. Mm-hmm. But basically, the premise, as I understand it, is that there is a emerging region in North America where we are, the West is basically trying to reduce their reliance on China, right? Because they have a huge monopoly on lithium batteries. Could you elaborate on that whole situation?
Yeah. So this is coming from a couple of places. The main area is just the U.S. government has realized that we do know that there is a transition happening from internal combustion to vehicle electrification. That is happening. by 2030, more than 50% of all new car sales in this country will be electric. So in order to facilitate that, you need a lot of materials that we don't have here and we have not typically mined here. Many of these minerals come from places where child slave labor is very common, and that's not a good look. But moreover, I think, well, I'll be brutally honest here. I don't think those in the government really care. I think what they care about is the national security issue.
Yeah.
And if we already, even though we produce a lot of oil here, oil is a global commodity. So OPEC exists because we drive internal combustion vehicles. OPEC has the ability to create very serious geopolitical situations that can affect the global economy, not just the U.S. economy. So we're kind of vulnerable. Even though we produce a lot of oil, we're still vulnerable to oil markets. The fuel, for electric vehicles is the battery. So we need to figure out how we can produce the batteries domestically so we're not relying on other countries that can decide, hey, we're going to stop production or we're going to slow production and fuck everybody over. In order to do that, we have to build up this infrastructure of mining and also recycling, battery recycling, which actually is, the battery recycling is a very big, I think that's going to be a really big issue. There are a number of companies that are recycling battery materials right now, are building these billion-dollar plants along the battery belt too. Because I think one of the most recent reports I read about the recycling of these batteries, cobalt is a key component in the battery packs. And cobalt mostly comes from Congo, again, child slave labor. You can get something like close to 60% recovery of cobalt through these recycling facilities on old batteries. So let's just say you could immediately cover, reduce your reliance on imported cobalt by 60%. Can we produce the other 40% in the U.S. and Canada? And the answer to that is very likely yes. So it's not going to be 100% mining. It's probably going to be a mix of mining and recycling, and we would still rely on some imports. But with China having a kind of stranglehold on not just the minerals themselves, but also the processing. We don't have enough processing here, so we're building that along this, what you call the battery belt, which is the recycling, the processing, and also these plants are being built alongside a lot of auto manufacturing plants. So you're essentially getting rid of like long distribution routes. There's one in Georgia that Hyundai's building. There's a plant that makes the electric cars, and there's also a plant that makes the batteries. And that's what you're going to see. And that battery belt, it's not just batteries, it's battery materials, it's recycling, it's the actual auto manufacturing facilities that are all along this what we're calling the battery belt.
Okay. And some of the, like, the investment opportunities that you're seeing there right now is mainly recycling. Are there any miners in that area, or?
There's definitely some miners that I like. Those are all in Canada right now. Oh, actually, no. One of them does have a property in Idaho.
Yeah, well, I know there's a lot of Canadian miners that are mining in the U.S.
Yeah. Some of them are there now. There's a potential for some of these mining companies to do quite well, but I'm very skeptical, like early stage mining, because I've been around a lot of these mining guys, and they'll just tell you, oh yeah, we got everything we need, and then 6 months later, we ran out of money. So it's. I like to see if it's a mining play. I want to see I want to see proven reserves. I want to see operations. I want to see a big chunk of cash and cash reserves, and which you're going to see, especially with the government putting billions of dollars into this now, and those mining companies are going to get some of that. I think mining, those companies are longer term in terms of when you're going to see a payout.
Sure.
Whereas I think the recycling companies,
they can do it right now.
I think they're actively building out their production now, and I suspect probably in about 2 to 3 years, these recycling companies are going to be covering more than half of all the domestically produced battery materials.
Gotcha. Well, I mean, it's definitely a compelling situation. You mentioned OPEC earlier, and I kind of see it as this parallel to what we saw during the fracking boom, which was kind of like America's play at reducing at least a good chunk of our reliance on OPEC. And now it's like we're trying to do the same thing, but with electrification and lithium and cobalt and all that. So, we know how much money those, was made during that fracking boom.
Right.
and I know that you might not be pro fracking because you're on the ESG side, but it's, if this seems like a very, very similar situation where we're probably going to see a huge kind of rush of cash and investment into that whole battery belt that you're talking about.
Oh, yeah. Well, so Redwood Materials is one of the bigger recyclers, and I believe they just got like a $2 billion loan from the government to expand their facility.
Yeah.
I do believe that they call the low-hanging fruit in this area will be the recycling.
Okay. All right. Want to talk about some of your favorite electric vehicle stocks, if you have any right now. Mm-hmm. You were one of the first analysts talking about Tesla. You were telling people to buy it, before its IPO, when it was IPOing. I read an article from you way back in the day, and you were saying buy this company. And I mean, that's obviously you're ahead of the game on that stuff. You've been interested in electric vehicles for a while, but obviously we've seen a lot of these companies already, explode in share value, and we've seen some of them dump in share value more recently. I know that you were recently writing about Canoo getting crushed after its financing round. The question to you is, has the ship already sailed on electric vehicle companies at this point, or are there any opportunities in that space? So
I think in terms of passenger vehicles, I think it's going to be very difficult for anyone to come in with a new electric vehicle company.
Yeah.
When Tesla came in, it was the only game in town. There was no competition. Now every major automaker in the world is making electric cars.
Sure.
I mean, I don't care if you have great technology or a great plan or a great design, you're still not going to have as much money as Ford or GM. And you need so much money to start any car company.
Yeah.
Interestingly, every new car company that's come out, I think in the last 5 years, has been electric only. Not a single new car company has come out that makes internal combustion vehicles, which is kind of telling.
That would seem like a silly thing for a company to do at this point, but
I'm going to start a typewriter company. It's
is there a point though maybe where we start to see where the resource constraints in lithium and cobalt do reach a point where it's so constrained that maybe there could be kind of this comeback moment for combustion engines?
I don't think there'll be a comeback moment. The resource constraints are real, and they're going to continue for a long time. But in terms of, I don't see a situation where there's going to be a situation where there's not going to be enough resources to build electric cars, so people are going to say, well, I guess I'll just get an internal combustion. The only way you'll see that happen is if the prices go up increasingly because of resource constraints, which is a possibility.
Gotcha.
And then it's because electric vehicles are already more expensive up front. If they become more expensive, then I could see people say, well, I was going to get an electric car, but I'm going to go back to a conventional internal combustion because I just can't afford those. Not to keep harping on the recycling thing, but that's another advantage of the recycling of these batteries. When you use oil to make gasoline or diesel to run your car, once that's combusted, it's gone. You can't recycle it. It's gone. It's vapor. The fuel, again, which is the battery, let's say just 50% of that can be recycled. Imagine if you could recycle 50% of every drop of gas you've ever put in your car.
Sure.
It's a big deal. So I do believe that because we have the ability to recycle these batteries now, that will alleviate some of the resource constraint problems. But I think that resource constraints are going to continue probably until the end of the decade.
Is there a specific company that you're watching, or companies in the recycling space?
Yeah, there's a number of them. Actually, my colleague Keith Cole has written about one of them that I'm a big fan of. I don't know if you can put a link to that report, but that's one I really like. Redwood Materials is a great company. It's private at the moment. There are rumors that it could go public. Depending upon the deal structure, that could be a really great opportunity.
Gotcha.
They have, at least in the U.S., are the leaders in terms of battery recycling. And there's some in Europe, too, that are doing recycling batteries on a smaller scale, but will expand. So Norsk Hydro is one of those companies that they have a facility. I think it's in Norway. It's quite small at the moment. I think they have enough capacity to build 25,000 new battery packs in a year, which is nothing. But they are actively expanding, so it'll be in the millions probably in the next 3 to 5 years. Europe and North America in particular are going to be the hubs for recycling, because most of Europe and North America, well, if you don't count Canada and parts of Mexico, it's not like we have these, massive swaths of land where we can just dig out a bunch of cobalt.
Sure. Okay. Well, Jeff, it's been good having you on the show.
That was quick.
Yeah. Is it quick? I feel like we got a good, maybe 20, 25 minutes in.
Okay.
I mean, is there anything else you want to plug, or?
Just to kind of hit on the ESG point again. I mean, everyone's entitled to their own opinions. If you don't think that it makes sense to invest in a company that integrates ESG into their operations, that's fine. But there's no reason to shit on people just because they don't want to treat the planet like a toilet.
Fair enough. Hey, Jeff, it was good having you on, and we'll follow up on some of this stuff next time that you come.
Thank you very much.
All right, thanks. Like, comment, subscribe, all that stuff. Join the Discord. We'll see you guys next time.